Welcome, everyone. Welcome, Nate.
Thanks, Jack.
Yeah, this is our brand new quarterly report for the 5210 Fund 1. And as we go through this, I'm going to kind of walk you or show you guys around. And then Nate and I will talk about each page where it's applicable. So first things we got to do is get it to shift to the next page. This page here, guys, you're going to see on the right-hand side, ongoing updated capital metrics. That's going to be the total amount of capital that we currently have deployed in the fund. It's going to be the current stated value of the portfolio, the amount of debt, and then of course depreciation. And you'll always be able to see that broken up on the bottom there in the form of a pie chart. This is the page where we'll talk about the overview or kind of generally what occurred over the quarter. So I think it's appropriate to address right away that this quarterly report for the first time in the history of our business is late. And although we didn't really like to do that, we felt like getting it right was more important than being on time. So apologize to those of you who were offended by that. But there was the reason why that happened was the way that the homes, the mobile homes were booked at the time that we launched the fund. So as you guys know, there was 4 assets that we owned at the time that we launched the fund. The mobile homes were booked at value instead of being booked at cost. So across our parks, we typically get those homes for free, but we'll articulate, that home's worth $20,000 or that one's worth $15,000 or and so on. And they were booked that way. So what ended up happening then is Nate will spend $15,000 renovating a home. He'll sell it for $20,000, and in reality, we made $5,000. But according to the book, we lost money because they were originally booked at that higher value. So all of that is fixed. That will allow us to distribute the cash flow that actually is distributable moving forward. So I just want to address why that delay took place for those of you who are not aware of that. Generally in Q2, I think this is where all of us recognize that COVID-19 showed up. Nate, I believe, did a masterful job in creating a CRD program. Currently, I believe we only have 1 tenant that's behind on their rent now. So it was very well executed. There was still some impact to the total rents that we received, but I think that impact was limited. And looking back, I think it's important to note that mobile home parks are supposed to be recession resistant, but they've also proven to be COVID resistant. The park that we had scheduled to close in Q2 was delayed, mostly due to COVID-19. So that one's back on target. We'll close that one in October. We'll make a capital call for that one in late September. We hired an internal property manager, and I'll let Nate speak to why that's important. In Q2, also, Redwood began the rebrand to Verivest. And just for those of you who haven't had an opportunity to speak with me or understand why that's going to be important, anybody who wants to kind of look under the covers and see who are Nate and Jack as sponsors of this fund, and then how is their business being operated, will really appreciate the due diligence that Verivest is going to do on an ongoing basis that will give all of our investors, both present and future, access to that kind of information. So Nate, why don't I hand the baton to you, talk a little bit about your property manager internally here, and then let's shift to the portfolio.
Yeah, the property manager is actually our manager that we had down at Central Park Estates. She proved to be exceptional, so I stole her, brought her into the fold of 5210. She was working part-time and just helping me create some processes for property managers and our teams on site. But we're getting exceptionally busy, so more support for me, which means more support for our investors and our properties and performance and everything. So she's now full-time, which is great. As it relates to Q2 cash flow, it was down from Q1. It was a net positive quarter across the portfolio, but this was mostly due to COVID. We had issues at Central Park Estates, which was no secret. The OG was impacted a bit as well. But the good news is we had demand for homes that really increased. So, all these people that were in apartments and they were, jammed on top of each other and using the same doorknobs as their neighbor, they were like, hey, look, I'm going to get out of here. So they were using that money and they came over and used our tax return money, and we had a whole demand shift for our homes. So it was a good thing. We sold a number of homes in Q2 that we hadn't expected on really selling due to COVID. So take the good with the bad. But overall, it was probably one of the more challenging, uncertainty kind of times that I've seen in the 20 years I've been in real estate. So, I think my team really handled it well, and we were prepared as absolute best as we possibly could be. So all in all, it went, I think, as well as it could have.
And then Nate will speak to the seasonality of the OGRV park when we get down to the fund performance on the last page.
Yep.
Okay, Nate, why don't you touch on, kind of the highlights from each of these parks as I flip through these pages.
Sure. So the OG, we've got a new management team. They took over there in February. I'm exceptionally impressed. They're a bulldog down there at running through projects and taking care of things that need to be managed. We crushed through a number of capital improvement projects. We made some adjustments to our seasonal resort rentals. So we now have 3 down there that we rent out to people who are just going to come and stay for 3 to 6 months in a fully furnished resort rental so they can get a taste of the park. We made some adjustments there to kind of create interest from January through March coming up. And then, from a capital improvement project kind of perspective, if you look at Q2, and it's going to trickle over here into Q3, the amount of work that we've accomplished down there and set the goals to accomplish during this off-season timeframe in the summer will easily be the most that we've ever done. We're putting some heavy investment into the park. We're going to make some good adjustments, and the residents, when they come back, are going to be really, really excited. It's going to make it a lot easier for me to push the rents there, which needs to happen. So let's talk Central Park Estates. We also transitioned in a new management team there. Like I said, I stole my manager down there and brought her onto more of that corporate level. So I replaced her and the maintenance gentleman there. The team that we've got there is also, we're lucky to get them. They've got a boatload of experience in really big parks. They loved our company. They love what we stand for. So they took a pay cut, and they're managing a smaller park just so they can come into the fold of the company. So really impressed with them. We also sold 3 homes there at Central Park Estates, like I was talking about. That doesn't seem like a big deal. And even though we didn't make a ton of money on the sale of the homes, those 3 homes added up to about $14,000 gross revenue over the course of a 12-month period at the park. So, fast forward, if I can accomplish 2 or 3 home sales, every quarter, that's a tremendous amount of value that's been added to homes that we effectively got for free. So that's a huge add value to a park like that. The other good thing is, COVID threw us through a loop with our park on home rehab team. It really forced us to get aggressive in finding some new teams. So the best part that's happened is we've got 3 teams down there working right now. So pushing really hard, getting homes ready. We've got like I said, a ton of interest. So we're trying to stay ahead with inventory. So, we're catching up. We were down last quarter, but we're catching up at a very quick pace. So, Jack, let's look at Santa Rita Heights. So Santa Rita, demand is also high for homes here. We sold a $55,000 home for cash last quarter. That was a great sale just because it's on a special piece out on the corner of the park where actually the lot rent is more than the rest of the park. So that'll be a huge add value. We continue to turn the park over. We've got some older residents that were there who didn't really fit within the brand of the park and where we're taking it. So we're kind of weeding those folks out. And we continue to push our capital improvements at that park as well. So we've got a ton of stuff happening for the remainder of the year and stuff that we're accomplishing here in Q3. So that park's humming along right where it needs to be. Very similar to what's happening at Melody Court as well. Quiet Park, only 50% of the park is there in the summertime just because Yuma is very hot, typically a seasonal type of atmosphere in Yuma altogether. We're pushing hard on home sales. We've got 15 vacant homes there approximately right now that need to be rehabbed and sold. But summertime's a tough time to sell homes down there. So we're using this time to try to get ahead on the rehab team. But It's been a challenge to find good teams down there. I've gone through 2 already, so I'm interviewing a couple more, and I've got to get them on board, and I've got to find a good team or 2 so I can crank through these things. So we've got inventory ready for November, December through March, and that kind of time frame. But we've got 3 homes ready to go now. They're on the market. We're getting some interest, which is a good thing. So we're also pushing hard on capital improvement projects there. But that park is it's an easy project. Doesn't have quite the capital improvement requirements that some of the other parks do. So focus is really there on home sales.
Okay, and one other thing to Nate that you might speak to, even though Melody Court is largely made up of seniors, and there is some folks that use that as a senior seasonal asset, the rent is still collected on a regular monthly basis. So quite a bit different than the way the OG rents come in. Yes.
Yes, it is. Very different. Runs typically like a regular mobile home park.
Yeah. Okay. Let's shift to the new acquisitions, and I'll kind of take the baton here, Nate. I think it's important to look first at the market. So over on the left-hand side, I'll always kind of share a market update. There's a ridiculous amount of demand for mobile home parks and RV parks in this market. So, and it's not just from guys like Nate and I, it's from institutional buyers and private equity groups like Blackstone and Carlyle Group and all those. Prices have remained stable. So as you've seen in some commercial real estate, cap rates have maybe bumped a little bit, and the prices may have gotten a little bit more favorable, but not in the mobile home park space at all. So we've actually seen new record high pricing in the mobile home park space all across the state of Arizona, and that's pretty consistent across the United States. Let's shift to the 2 assets that we're about to acquire. So both of these assets we'll acquire this year. Palo Verde Hills is a park that we put in escrow in the end of Q1 when our intention was to close this in Q2. But due to COVID, that got delayed till October. So Nate, why don't you spend a minute or 2 just kind of sharing what are the things that you really like about this park?
Yeah, this park is going to be a great little addition to the portfolio. 49 pads out in Apache Junction. It's nearly 100% occupied with homes. It's 94% economically occupied. So we've got a little bit of room there, but it's got management in place. It's going to be a very simple plug and play. But the other thing that's important to understand is, we hit pause on this escrow when we did, and that was really because the debt markets were so frozen up in March and April due to COVID and the PPP loans that were being generated. A lot of these, regional and community banks were really overloaded with trying to get the PPP loans done, and we just couldn't get some of the regular players in this space to focus on the deal. And it was proven to be really smart that we hit pause, because now the debt markets have really loosened up, and we're going to be able to put some really great debt on it. The time frame for the seller, he didn't want to wait another 3 months to put a loan on the property. So we're going to close cash, and then as soon as we close cash, we're going to come back and we're going to put debt on it. But mobile home park, great location, close to our operating space. It's not a 3-hour drive, it's a 45-minute drive. So there's a lot of really good stuff that's happening over there. I'm going to be excited to get my hands on that one.
Thank you, Nate. Let's pivot to Country Breeze. And just like Palo Verde Hills, and we're buying these directly from the owner. So these were never on the market. These were not, we're buying these at a discount to market because of our relationships with the owners. And this one here, it's in Yuma. We're really excited to bring this one on. Nate, why don't you spend a few minutes talking about how this one gets you excited?
Yeah, 150 pads. What's really cool about this one is this one will be the 3rd acquisition in the Yuma market. It really rounds out the portfolio down there for us. We've got the OG, which is park model RVs. We've got Melody Court, which is a 55-plus mobile home park. And then this particular park, which is going to be a family mobile home park. So no matter who calls us at any one of these parks, we're going to be able to send them somewhere to find a place to stay or find a new home. So it's a really good way to get some economies of scale and start moving people around and creating some more opportunities. So 159 pads built in the early 80s, which is great from an infrastructure perspective. It's nearly full. It's in a great area of town on the southeast side where we've got a whole bunch of new development happening. There's brand new homes being developed on a couple different sides of this particular park, brand new Walmart just down the street. The location's fantastic for this particular deal. And it's probably one of the nicer family parks in town. And there's still a ton of room for some improvements to be made. So rents are below market. We can probably push rents 15 to 25 bucks right out of the gate. We've got tons of room to lower expenses. The current owner's out of town. He lives in California, and they're managing it from back there, and they're really overspending on the on-site payroll. So we'll be able to cut that down right out of the gate. And they're not billing back for some of the sewer systems and a couple of the other things that you typically see. So there's a ton of upside here on this particular deal. What's really cool about this, and I'm gonna give you a big attaboy here, Jack. So, Jack, as he identifies properties here and identifies sellers who are in the market to potentially sell, Jack's having a direct conversation with this seller. You got the sense that the guy was gonna be in the market to sell, or a deal we really wanted to buy. So he got on a plane last June, flew out to California, and had lunch with this gentleman. So that kind of relationship has been built over the last 12 months. And when Jack, made that last call, he said, "You know what, Jack, I really like you guys. I want to sell the park to you." I enjoyed our lunch that day. It meant a lot to him that Jack went out and introduced himself in person. So that's the reason that we got the deal. And it's going to be a great opportunity for us to get our hands on. And it's going to be really cool that it's down to Umore. I have a ton of resources already. So I'm already considering some economies of scale with some of the maintenance guys down there and some of the management teams, and it should be a great addition to the fund and really help to boost overall returns.
Okay, well, thank you, Nate. Before we move on from this page, on the left-hand side, you'll see a few comments there that we already have the amount of capital that we need to close the Palo Verde Hills project, but we will be seeking capital commitments, roughly about $2.5 million, so that we can fund Country Breeze. Okay, let's move to the important page. I mean, that's kind of an update of what happened in Q2, but this is where the rubber meets the road here. So I think it's really important for those of you who haven't had this conversation directly with me or Nate, that the fund, because of Oasis Gardens, the fund has some seasonal performance with respect to the distributable cash flow. So in Q4, between October and April of every year is when the bulk of the income is received at the OGRV resorts. So that'll be Q4 and Q2 every year, or Q1. And then in addition to that, Nate spends the summer months in Q2 and Q3 doing all the renovations and all the expenses and all of that kind of heavy lifting that occurs there. So because of that, and because right now the OG makes up about half of our spaces, you're going to see a seasonal dip in income. So the fund produced 11% in Q1, and then you'll see here on the right-hand side that that overall fund performance is down to 7.91. So you're going to see that happen. On the right-hand side here, there's 5 items that we're going to that will be adjusted each quarter. One of them is reflective of how are we doing related to our original projections when we acquired each park. So Nate lays out a 7-year performance projections with respect to cash flow, and right now he's beating those projections by 5%. The net distributable cash flow will always be spelled out here, and then how that reflects your distribution as an investor in Q2. So now these are annualized numbers, and if you divide that by 4, you'll see where that's at. But the goal here is that we'll get that stable at 6%. I think that you're going to see Q2 and Q3 be below 6%, but as soon as we take on some more of these parks, you're going to see that seasonal behavior start to flatten out, and that this won't be the case. Current unit value is at $1,000. When we get ready to acquire the park, Palo Verde Hills, we'll be restating the values, and it's likely that those unit values will adjust. When we make those adjustments, we're going to describe how that happens, so everybody will be clear on how that works. Bottom line, the portfolio is on target to exceed the NOI projections at each park. That's that 105% number up there. The Q2, Q3 distributions likely be short of the preferred, but we're going to catch up in Q4. So just make sure, just so that everybody can be comfortable, if we get to Q4 and we're still short of the preferred return, which we don't anticipate at all, then it will be on Nate and I to give back the distribution portion that we received in Q1 to make up for that. But based on how we view the portfolio, we're still on target to meet the preferred return for the year. A few housekeeping items. Distributions are in process. Anybody who's direct deposit, you're going to see those arrive in your account. Every bank and every institution is a little bit different. So, and of course, we got a holiday right in front of us right here. So give yourselves 3 to 5 days for those to show up. Anybody who's reinvested their distributions will see their paid in capital amount increase in their dashboard. So, and you can always go to 5210.com, go to the resources page, and you'll see access to that portal right there. I'll be uploading the balance sheet and the P&L, and then Verivest will upload each individual investor's statements to your dashboard. And then you'll also see a PDF copy of this report. And then one other last little item, some of the people last quarter did the calculation on their distribution, and they didn't realize that distributions are based on a 365-day year. So some quarters have less days than other quarters. Q1, for example, has February with only 28 days. So I just wanted to make sure I shared that little detail with everybody so they know that your distributions are calculated daily. So that wraps up our quarterly report. I want to thank you guys for being patient with us since we're a couple weeks late here. And if you have any questions or you're ready to make another capital commitment, you can reach out directly to me. Anything else you want to add there, Nate?
I don't think so, Jack. This is a great little report you put together. Kudos to you, man.
Well, thank you too, Nate. We make a great team. So thank you, everybody. Enjoy the holiday weekend. Look for your distributions here shortly.
Thanks, guys.